Many thanks for your time. To our stories now. The board approval by the International Monetary Fund for the fifth review of Ghana's bailout program will likely be secured in December 2025. That's according to IC Research prediction. This is coming after the government of Ghana and the IMF mission reached a staff-level agreement on the fifth review in October 2023 as the authorities met all 6 quantitative performance criteria and 4 indicative targets for the period to end in June 2025. The approval would trigger a disbursement of $385 million by the fund, which strengthened the forex reserves ahead of the January 2026 Eurobond debt service, estimated at $689 million. IC Research explained that the IMF struck a more bullish tone in the fifth review compared to the steadily softer tone deployed over the first 4 reviews. We took a closer view of the language adopted by the fund at the end of the fifth review and inferred a more positive and tangibly confident assessment of the latest performance and near-term economic prospects. The fund described the authorities' actions to support financial sector stability as strong, while indicating that the authorities made notable strides in addressing long-standing challenges in the energy sector. Overall, the IMF concluded that macroeconomic stabilization is taking root, with inflation forecast to remain within the Bank of Ghana's medium-term target range, which is 8.0%. allowing for gradual monetary policy normalization. Away from that, the private sector credit to gross domestic products, which is the GDP gap, remained negative as of the end of August 2025. The Bank of Ghana disclosed in its September 2025 monetary policy report. The private sector credit to GDP gap is another measure of macro-financial risk. A positive credit to GDP gap indicates that total private sector credit extensions relative to the size of the economy is above its long-term trend, and vice versa. According to the central bank, Ghana's credit to GDP remains negative and declining, suggesting the need for measures to promote credit delivery to support the real economy. Meanwhile, the soundness of the banking sector continues to improve as at August 2025. According to the Bank of Ghana, the banking sector soundness index was significantly above the long-term trend, nearing the pre-domestic debt exchange program, which is the DDEP level. This reflects improving solvency positions, adequate liquidity, and strong earning performance. The non-performing loans ratio, though marginally improved, remained elevated. The report said the ongoing macroeconomic recovery, supported by the implementation by banks on how to reduce non-performing loans, should help moderate the build-up of new non-performing loans and improve overall asset quality. Moving on, Volkswagen Ghana has celebrated its 5th anniversary with the unveiling of the new Volkswagen T-Cross SUV, underscoring its commitment to deepening local automotive production and expanding its presence in Ghana's fast-growing vehicle market. The event, held yesterday at Airport City in Accra, brought together key industry stakeholders, automobile enthusiasts, and business partners to commemorate the milestone. Speaking to Z News on the sidelines of the celebration, Chief Executive Officer of Volkswagen Ghana, Mr. Jeffrey Opepra, expressed satisfaction with the company's steady growth and increasing market acceptance over the past 5 years. He noted that Volkswagen's locally assembled vehicles have earned stronger consumer confidence and brand recognition. He said the Ghanaian market has evolved and they've seen great acceptance from customers who value quality, affordability, and reliability. Hence, their decision to assemble vehicles locally rather than import fully built ones has truly made a difference.
It's been great. As you see where we have come from 5 years, I mean, starting everything is not just rosy and weather. There has been a quite bumps in there, but so far, I think we've done well. We pride ourselves that to penetrate the market with our assembly plan established in 2020, and then also move on to produce vehicles for the market, locally assembly, and then with a focus of even going into the sub-region. I think it's a great achievement and a milestone that we have achieved in the last 5 years. Difficulties, we got a lot, but of course we have come to stay, and we want to move on forward. So we're just looking forward to get to manufacturing stage. But so far, I would say we're happy. It could be better, but yeah, of course, there are also economic challenges and all these things, but it does not stop us. The show must go on. The market acceptance have grown because where we come from again, we came into the market where VW used to be known back in the late 80s and even till the early 90s. But with time, the VW lost a lot of market share. That's why we use this strategy to assembling vehicles here when the government policy came for automotive development in relation to industrialization. We find it is also an appropriate time to jump on such a policy to assembly vehicles, bringing VW to the doorstep of Ghanaians and also in the SAP region.
That was the Chief Executive Officer of Volkswagen Ghana, Mr. Jeffrey O. Pepra. To one of our headline stories, the Ghana COCOBOD has inaugurated management committees for 4 of its key divisions and subsidiaries as part of efforts to strengthen governance, enhance institutional efficiency, and promote accountability. The newly inaugurated committees are for the Seed Production Division, Cocoa Health and Extension Division, Cocoa Research Institute of Ghana, and the Cocoa Clinic. Speaking at the inauguration ceremony, the Chief Executive of COCOBOD, Dr. Randy Abbey, underscored the crucial roles played by divisions and subsidiaries in fulfilling the board's mandate. He noted that the establishment of the committees align with President John Dramani Mahame's research agenda, which seeks to promote efficiency and innovation within public institutions. He urged committee members to adopt creative and resourceful approaches in addressing the challenges within the cocoa sector. Dr. Abbey further encouraged the use of internally generated funds to implement solutions rather than over-relying on external financial support. To some more business stories, investor confidence in Ghana's capital market is coming under renewed scrutiny following the implementation of the capital gains tax on securities, a policy that some stakeholders say risk reducing the market's appeal to both local and foreign investors. While the Ghana Stock Exchange remains one of the best performing markets globally this year, its managing director Abnamwa says concerns among potential issuers persist, particularly around the cost of doing business and the broader macroeconomic environment. Speaking during a panel discussion at the 14th Ghana Economic Forum in Accra, Madam Abnamwa said several companies are holding back on new listings or capital raising efforts due to structural bottlenecks that make the investment climate less competitive. She pointed out that the high cost of capital and energy challenges continue to weigh on business confidence, even as market activity shows signs of recovery. The Ghana Stock Exchange Managing Director also added that discussions around taxation remain key to sustaining investor momentum. She further stated that the stock exchange is working closely with policy makers to ensure that the market remains attractive to long-term investors. To our final business story, the leadership of Ghana's major farmer groups and agribusinesses associations have declared a nationwide boycott of the 2025 Farmers' Day celebrations, citing government inaction and worsening conditions in the country's food production sector. The decision, announced in a joint press release yesterday, involves rice producers and millers, maize farmers, mechanization service providers, input dealers, and apex farmer associations, together with key players in the agribusiness value chain. The boycott will affect Farmers' Day events at the district, regional, and national levels. According to the statement, the action stems from what the farmers describe as the deep frustration over the government's failure to address mounting challenges, particularly those affecting rice, maize, and soya producers. The group accused the government of neglecting its promise to purchase locally produced rice and maize through the National Food Buffer Stock Company, as assured by the Ministry of Food and Agriculture in a public statement issued on 23rd of September 2025. The farmers also raised concerns over the influx of cheap, expired, and smuggled rice into local markets, which they say are often backed by politically connected importers. These imported products, they allege, are repackaged and sold without proper regulation or tax compliance, severely undermining local farmers and millers. As of last week, the group noted that more than 200,000 metric tons of paddy rice from the 2024 harvest remain unsold across the Upper East, Northern and Northeast regions, with Ghana's 2025 rice output projected at 1.5 million metric tons. Farmers fear a worsening glut that could drive many out of businesses. And this is where we end the business news segment. A look at our top stories again. IMF Board approval for fifth review of Ghana's program to be secured in December 2025. Also, private sector credit to GDP remains negative as of August 2025, and Ghana COCOBOD inaugurates management committees to boost efficiency and accountability. We came your way with detail of these stories and many others. For more news, you can log on to zmultimedia.com, or you can follow us on Instagram, Facebook, and X at ZFMGH, and on TikTok and YouTube at ZMultimedia. My name is Stephen Freeman. Up next is Sports Flash.